Energy is exploding, up 6.71% this week, with a bullish trend driven by global demand. Now, a key catalyst or major risk is the supply chain. This is what every serious investor needs to know about energy right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we enter the week of May 18th to May 22nd, 2026, the overall market context is one of normal conditions, with the VIX at 19.0, indicating a relatively stable environment. In this context, the energy sector has been standing out, with the sector ETF, XLE, delivering impressive performance, up 6.71% this week, outpacing the S&P 500. This strong relative performance is a key reason why the energy sector deserves our attention right now, as it may be signaling a shift in investor sentiment. As we dive deeper into the sector, it is essential to remember that this is educational content and not financial advice. The energy sector's recent surge may be driven by a combination of factors, including supply and demand dynamics, geopolitical events, and commodity price movements. Let us start with the technical picture and what the charts are telling us. The energy sector, as represented by the XLE ETF, has demonstrated notable momentum, with a weekly change of 6.71% and a monthly change of 5.05%. The Relative Strength Index, or RSI, currently stands at 59, which implies a bullish signal, suggesting that the sector has room for further upside movement without being overbought. This RSI reading indicates that the sector is gaining strength and conviction, with the trend direction clearly pointing upwards. Key support levels likely exist around the recent consolidation zone, while resistance levels may be found at the higher end of the recent range. The current move appears to be a sustainable breakout, rather than an extended overreach, as the sector has been consolidating for some time, building a strong foundation for further gains. This week, we will be watching for a potential retest of the breakout level, which could provide a technical setup for further upside. The bullish momentum and RSI readings suggest that the sector is poised for continued growth, with the current trend having a high degree of conviction. Now let us look at the fundamental catalysts driving this sector. This week, the energy sector is likely to be influenced by general macro conditions, as normal market conditions prevail and the VIX holds at 19.0. On the macro front, tailwinds include a rebound in global demand, which should support oil prices, while headwinds may come from ongoing supply chain issues and geopolitical tensions. Key stocks such as XOM CVX, COP SLB, and MPC are signaling a relatively healthy sector, with some of these names showing resilience in the face of volatile commodity prices. Earnings reports from these majors will be closely watched, as they provide insight into the sector's ability to navigate the current environment. Regulatory news, particularly around renewables and energy infrastructure, may also move the sector. From a longer-term perspective, the fundamental thesis for the energy sector remains intact, driven by the ongoing transition to cleaner energy sources and the need for traditional energy companies to adapt and diversify. As the global economy continues to grow, so too will demand for energy, and the sector is likely to benefit from this trend. Please keep in mind that this is educational content and not financial advice. This week, investors should pay close attention to macro data releases, which could impact the sector's near-term outlook. Next, let us talk about the specific risks you need to manage this week. Risks and risk management are at the forefront for energy investors this week, with geopolitical tensions, supply chain disruptions, and demand fluctuations posing significant concerns. Given the current volatility environment, with the VIX at 19.0, position sizing should be carefully considered, as even small changes in market sentiment can have a profound impact. Unforeseen events, such as a major pipeline outage or unexpected policy changes, could also act as unexpected headwinds. To mitigate these risks, a disciplined framework for managing downside exposure is essential, including stop-loss orders and ongoing portfolio rebalancing. By acknowledging these risks and taking proactive steps to manage them, investors can better navigate the complex energy landscape. It is essential to remember that this is educational content and not financial advice. And now for the strategic outlook. Where does energy stand heading into next week? This week we maintain a bullish stance on energy, driven by strong demand and supply constraints. A key theme to track is the ongoing shift towards renewable energy sources. Please remember this is educational content and not financial advice. If you found this video insightful, consider liking, subscribing to Financial Market Oracle, and commenting your energy watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.